And good morning and happy Monday, all you wonderful melon heads. Today is May 8th, 2023. And in what has got to be just about the most ridiculous story I've read this year, yesterday somebody uploaded 11,000 Monkey NFTs to the Bitcoin network. And, well, 11,000 Monkey NFTs uploaded to the Bitcoin network has caused all kinds of traffic and congestion, driving up Bitcoin's transaction fees, slowing everything down. Binance had to halt withdrawals because of it. It just made a whole big mess. Some people are saying this is a distributed denial of service attack, a DDoS attack on the Bitcoin network. Some are saying, see, Bitcoin has this block size problem. Oh, we've been warning about this for years. Other people are saying it's a CIA psyop. Whatever it is the most ridiculous story I've read in a long time, and I'm going to do my best to cover it for you guys. Elsewhere, we've got California has defaulted on nearly $20 billion of unemployment insurance, even though California ran a huge budget surplus last year. And this has got to be probably only about the 14th or 15th most ridiculous thing to come out of California in the last 24 hours. So that's going on. State businesses will be left holding the bag. But you got to wonder, if you're a business owner in California, what are you waiting for? What are you doing? Are you sitting around waiting for that state to become more business friendly? Probably not going to happen. Get out of California, folks. Just get out. Just leave. The state is gone. Like we gave it our best shot. The weather's still nice. I get it, but just go. Just get out. Otherwise, we've got regional bank stocks are rallying again this morning. Again, the government comes in last week on Friday. They started the rumor that they might ban short selling of bank stocks. And then they had the SEC issue a couple of statements that they were looking into trading in perfectly healthy banks. All these veiled threats at short sellers. And lo and behold, it triggers a short squeeze in these regional bank stocks. So now they are ripping higher once again this morning. And with that, we're going to shrink my big melon of a head and let's see what's happening in markets. We've got the S&P is just barely positive by a fraction of a point right now at 4,136. We've got the Dow is up about 18 points, 0.06% at 33,693. And the NASDAQ essentially unchanged, down 3 points, 12,232. Flat for the day. So not a lot happening in stocks this morning. The DXY is still in that 101 to 102 range. This is the US dollar measured against other global currencies. It's been in this range for about a month and a half now, although it is at the bottom bound of the range, threatening to break down in that head and shoulders pattern that I've been pointing to for a while. Looking over at the bond market, we have got the 1-month U.S. Treasury yield is up only about 1 basis point right now at 5.47. I was going to look at the Treasury general account to see how much money Uncle Sam burned through on Friday, but they haven't posted it yet. They haven't updated the TGA number, so I don't have any data to bring you on that. I guess if nobody actually looks at how much money is left in the government's account, then they can never actually default, right? That's how it works. See what I did there? Now we're thinking outside the box. All right, the 10-year Treasury yield is at 3.51, up 7 basis points this morning. Not a lot happening there. In the commodity space, we've got gold is up $5 at 2,030, up about 0.25%. Gold holding strong over that 2,000 support line. Silver not doing quite as well today at 25.92, down about a penny. No big move there in silver. Crude oil is up another $2. It's had a good couple of days after that sell-off late last week. We're now at 73.28, up 2.7%. Guess they're not going to be refilling that strategic petroleum reserve anytime soon, are they? Not with an empty Treasury general account. Seems that the federal government has wasted this opportunity of high 60s, low 70s oil to refill the TGA. Well, let's be honest, none of us ever really expected that they were ever going to refill the TGA. We knew that was a one-way street from the get-go. Also, natural gas up about 7 cents right now, or 3.5% at $2.21. But here is the story, folks. Crypto stocks fall after Binance halts Bitcoin withdrawals for hours. They actually halted twice yesterday throughout the day. Reading on from this one in Reuters, shares of cryptocurrency and blockchain-related companies fell in pre-market trading on Monday after Binance halted its Bitcoin withdrawals for several hours due to heavy volumes and rising processing fees. The halts pushed Bitcoin, the world's biggest cryptocurrency, down 2% to a one-week low of 27,900. Coinbase was also down 4%, while blockchain farm operator Bitfarms dropped 4.3%. Crypto miners, including Riot Platforms, Marathon Digital, and Hut 8 Mining, declined between 4.6 and 7.2%, tracking lower Bitcoin prices. Binance, the world's largest crypto exchange, shut Bitcoin withdrawals for an hour late on Sunday and for about 3 hours on Monday, saying there was a glut of pending transactions because it hadn't offered so-called miners high enough reward to log the trades on the blockchain. The company said it set fees, did not anticipate the recent surge in Bitcoin network gas fees, yada, yada. So why were Bitcoin fees so high yesterday, you might ask? Well, of course, blockchain, I can't even keep a straight face when reading this story. Block demand leads to fee spike as Bitcoin-based meme coins flourish. Over 11,000 tokens have been issued and traded on the Bitcoin network, data shows. 11,000 monkey JPEGs. Pictures, NFTs of monkeys. 11,000 of them. All uploaded all at once onto the Bitcoin blockchain yesterday, and it caused traffic. And when there's traffic, they raise the price of the toll booth. So it costs more money to move your Bitcoin around. No, Bitcoin didn't break yesterday. Bitcoin still worked. I can see all the anti-Bitcoiners comments right now. That got slower. The transaction fees went up because apparently these people are paying top dollar to move their monkey JPEGs around on the Bitcoin blockchain. Fees on the Bitcoin blockchain have surged to 2-year highs as the Bitcoin request for comment or BRC20 tokens and the rising popularity of the Ordinals protocol drives demand for block space. Average transaction fees on the Bitcoin network were hovering at just under $20 during European hours on Monday, a bump from last week's average of a $1.20 level. Such levels were previously seen in May of 2021 when Bitcoin prices were then at a record of about 60,000. The number of non-fungible tokens or NFTs tied to the Bitcoin blockchain surged above 3 million last week after a one-day spike in activity that mainly consisted of text-based assets, data from Dune Analytics showed. So, I mean, guys, I was trying to make heads or tails of this story. I'm not that far into the tech and, the mechanics of how Bitcoin works. By the way, shout out to Patrick over at Economic Preppers, who's been answering my questions over Twitter DMs all night because I had a lot for him. It's really that simple. Some dudes uploaded 11,000 pictures of monkeys onto the Bitcoin network, and it clogged everything up, and it caused the fees to go from $1 to $20. So they're paying top dollar to move these monkey pictures around. Is this an attack on Bitcoin? Is this a DDoS attack? Is that what it is? Are they trying to bring the network down? Or is it just these NFT guys and the meme coiners just doing their thing, causing problems? I don't know, to be honest with you. I couldn't tell you what it is. But one thing is for certain. The key beneficiary of this is the Bitcoin miners, the people actually processing the transaction. They are making money hand over fist from these increased transaction fees. They are definitely the chief beneficiary of this story. Now, we are going to move right on from this story because it is the most ridiculous thing I've read in a long time. And speaking of ridiculous things, California defaults on an $18.5 billion debt, leaving state businesses holding the bag. And my God, to be a business owner in the state of California, my hat's off to you guys, any of you California business owners. I cannot imagine what it is like, good God, to try to do business in a state that just hates you. Let's be honest, your state government hates you if you're a business owner in California. Little did California businesses know that they were co-signers on the state's nearly $20 billion loan from the federal government that was used to cover California's unemployment fund shortfall during the COVID pandemic. The ugly truth became apparent when the states recently decided to stop making payments on this loan. When a state defaults on its federal unemployment insurance loan, federal law requires that the state's businesses then repay the loan. What makes this default even more egregious is that the Stone Age era IT system of the state's Employment and Development Department, or EDD, opened the floodgates to bad actors, permitting more than $30 billion in fraudulent unemployment claims during the pandemic. Those receiving fraudulent payments included incarcerated felons, a person impersonating a 1-year-old, a person impersonating Senator Dianne Feinstein, and a single residential address received checks for around 60 separate individuals filing from that address. This could have been avoided with a competent EDD, but the department's performance has been deficient for decades. Now, here's the kicker. With an unpaid federal unemployment insurance loan, the federal government raises the unemployment insurance tax immediately by 0.3% on each business within the state and an additional 0.3% each year after that until the loan is fully repaid. And the normal federal unemployment insurance tax rate is 0.6% per year, which means that California's businesses will be paying several multiples of the normal federal tax before the loan is retired. And they estimate it could be, even without factoring in a recession and lower tax receipts and lower revenues, we're looking at 2029 to 2030 before California pays back this loan. So Gavin Newsom and the people at the State House in Sacramento have just given a big FU to the business owners in California. Why pay back the loan and make things just a little bit easier, or at least not make things harder for your business owners in California? Why do that when you can spend those billions of dollars, I don't know, studying the emotional trauma of misgendered porcupines? I'm sure California is going to find a great reason to spend that money on that. Anyway, so my hat's off, my sympathies to your California business owners. Good luck with that. That's the best I could say. Elsewhere, over in Bloomberg this morning, we've got PacWest leads rally in regional banks after slashing their dividend. KBW Regional Banking Index dropped the most last week since March, but PacWest cut their quarterly dividend and said their business is sound. Not too much to see here, folks. Again, the government basically intimidated short sellers into backing off by threatening them with a ban on short selling, which would kill their positions, and then also threatening them with regulatory scrutiny and possible retaliation from the government. So lo and behold, that causes people to stop short selling bank stocks. And remember, short selling is a key, vital, organic function of the markets that helps with real-world price discovery. And so when you intimidate away the shorts, you don't get real-world price discovery. You get artificial short squeezes like we're seeing in PacWest Bank stock right now, which is up another 19% after being up 82% on Friday. This is not organic price movement in the stocks. This is just the government putting their fingers on the scales. Anyways, guys, that's all I got for you today. I want to say thank you very much to my Patreon supporters for everything you guys do for the channel. Oh, wait, I got a super chat. I missed it. I'm sorry, Steve Whitus. I didn't see you there, brother. Give me just 1 second. I'll find you. There's Steve Whitus. Thank you, sir, for the super chat and the support of the channel. He says the U.S. 10-2 inversion has been long and deep. Can you explain why yield curve inversion is a harbinger of economic recession? Well, ultimately, yield curve inversion means people are paying higher interest rates for short-term debt than they are for long-term debt. Why would somebody feel more comfortable lending you money long-term than lending you money short-term? Because they see more of a risk in the short term. So they'd actually rather lend long-term, collect a lower yield. That's a flight to safety. When you see people are willing to accept a lower interest rate to make a longer-term loan, that means they see something dangerous in the short term and they're hiding. It's a flight to safety on the long end of the yield curve. And that's when you get this inverted yield curve. And we have never seen a yield curve as inverted as we have right now today. We've never seen it this inverted. And it's been inverted for the better part of 3 years now? So if history is any lesson, the duration and the severity of the inversion in the yield curve usually is an indicator of the duration and severity of the recession to follow. We'll see if that holds true with this one. Thank you very much, Mr. Whitus. I do appreciate the super chat, sir, and the support of the channel. And I apologize. I almost missed you there. Caught you at the very last minute. All right, guys, I also want to say thank you to my Patreon supporters for everything you guys do for the channel. Looking forward to talking to you on Wednesday on our Zoom call. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And until next time, live small and dream big.